Welcome to the Passive Income Podcast. I am your host, Dividend Dave. Please be sure to hit that subscribe button, whether you're watching on YouTube or listening on any of the audio platforms. And please be sure to comment below as well. Definitely need to get more comments going on in the comment section. And please welcome today's guest, Nick, who you can find on Twitter at Div Growth Income. So I'm going to throw it over to you, Nick, to give yourself an introduction.
Hi, well, thanks for having me today. It's great to be here. So yeah, I'm 41, live out west, and been dividend investing for oh gosh, really about 4 or 5 years. But I ended up going through divorce that ended up really messing that up. So consistently being able to go invest, maybe about 2 years now, because that really wrecked my situation.
Right.
And but getting my life back on track with dividends, passive income, and I've started a Twitter and a YouTube channel to kind of share some of the knowledge I've learned over the last 5 years, and it's been doing pretty well to start out. So I'm glad to be here and share
Yeah,
this
very
stuff.
well.
Yeah.
So there's your YouTube channel at
Yes.
Div
Yes.
Growth Income, over 3,000 subscribers in just a few months. So that's a great start for for anybody on YouTube.
Yeah, I started it thinking because you see, you should do 100 videos or something, and keep going even if you don't catch on. And
Right.
mine started catching on. I was monetized in about 45 days, and that my goal was to be monetized by the end of next year. So it's
Wow.
good.
Yeah.
So,
Really
so
surpassed
yeah,
that
it's
goal.
as you can see, I'm a software engineer, so my art isn't. It's kind of basic, and
Yeah.
I'm not artistic, but
Hey, but
yeah,
the thumbnails get the point across, right? Just
exactly. I'm trying to keep kind of consistent look to my stuff, and yeah. But so far, it's doing pretty well. We got a couple of videos there that went kind of viral, for
yeah.
a small channel, and it's definitely been fun. I'd love to be able to do more, but I work full time, and I have a daughter who I have every other week, so I'm a single dad part time,
Right.
and so getting to put time, and I can't put the time into it that I'd like to, but
Definitely is difficult to
yeah,
find the
for sure.
time. Even me doing this, it's very difficult, obviously, to find time to connect with people. Yeah, and with the time differences, like it's 11 a.m. for me right now, 8 a.m. for you.
Yep.
So it's always just trying to connect and figure out the time to be able to do things. And then there's your Twitter account at Div Growth Income, so you can definitely give Nick a follow on Twitter as well.
Absolutely, for sure. Thanks.
Oh, okay. And with that said, let's start talking about some of the different market sectors that you like.
Oh, sure.
Anything? I guess let's just start with what's your, I guess, like favorite market sector, and we can dive into that.
Well, favorite. If I looked at my portfolios, my heaviest would be in the information technology sectors because I have a lot of Apple, I have a lot of Microsoft, and then companies like Texas Instruments, something like that. So probably the information technology sector, just because that's where I have the most allocation.
Right. And you just said that's your background as well, like that's what you do for a living, so you understand the industry?
I do, yeah. I am a software engineer.
Right. Yeah, so you're definitely involved in that industry. Makes sense to me that you would be invested in that industry as well.
Yes, absolutely. But I try to keep a good balance, and stay diversified. I like the staple sector. Obviously, for dividends, consumer staples have some of your best,
Right.
staples, defensive stocks that even in times like this where we're in a recession, maybe, or maybe we aren't, but
Maybe.
inflation.
Right.
It's good to have some, Procter and Gamble, or Johnson and Johnson. Those core stocks,
Yeah.
Pepsi, that they're going to be there.
Coca-Cola, Costco,
Exactly.
right? Like,
Yeah, yeah, yeah. So I'd put consumer staples there at a close second for favorites, and then
yeah,
industrials has a lot of really good ones too, for
right.
dividend payers, and yeah.
Yeah, I like the consumer staples for the exact same reason you just mentioned is like, people have to eat every day, whether it's a recession or a boom time.
Right. Yeah. I think if I could only invest in one, it would be
You
the
don't
in the
really
staples, you know?
you might change your eating habits a little bit, but you still need to be talking over you. Go ahead.
No, no, definitely. But yeah, the staples, I mean, if they're like if I could just invest in one, it would be staples because those are gonna be there no matter what, you know? I would say my favorite in that is probably Pepsi, PepsiCo, and Procter& and
Right,
Gamble, companies like that.
right.
And they're in all our
Yeah,
houses, you know?
exactly, exactly. So,
I think I lost you.
and, um, just one town over, there's actually
Mhm.
a PepsiCo-owned plant where I think they make Quaker products there, like Quaker, oats or Quaker muffin
Yes.
mix or something like that.
Yeah, I know the Quaker products are under the Pepsi umbrella. Yeah.
Right. And so, like, I mean, I'm sure you've seen that chart that shows how many brands are under, like, PepsiCo and under General Mills, under Kellogg's and Coke, and it's like, 99% of the grocery store is in those 10 or 12 companies, right?
Yeah. Yeah, there's not a whole lot of players there when you really get down to it, you know? So, if you're buying stock in Procter& and Gamble, you're buying everyone has their laundry detergents or their bathroom products, that
Toothpaste.
everyone uses that stuff. Everyone needs to brush they better brush their
Yeah.
teeth, right?
I hope so.
Yeah. So, yeah,
Okay.
I've also I think I've really become the more I've been into this, the more I'm just drawn to like index funds, like S&P 500, and I think my favorite is SCHD. I think that's everyone's favorite, right? SCHD.
Yeah, for, all of my American guests, as I'm sure you know, I'm in Canada, so I have obviously a much different perspective, different portfolio, focusing on a lot more of the Canadian market.
Ah, I need to get some Canadian exposure. I'm very American in my holdings right now.
Which is fine because, like we've already mentioned, so many great American companies that pay you that nice dividend, whether it's Apple, Texas Instruments, Costco, Pepsi. We've named
Yeah,
at least a dozen of them already, just in not even 10 minutes, right? So
for
there
sure.
there are so many great American companies that are well worth the price of admission, so to speak. Not financial advice, obviously, but um, yeah. And I guess moving on, I can actually talk to your comment a little bit about the Canadian market and wanting some exposure. You've probably seen tweets about the Canadian banks, very strong sector there, and
Yes.
paying dividends since the early and mid 1800s. So, um, kind of an incredible sector onto itself. They're the Canadian banking and financial sector. That's definitely something to look at. Um, the Canadian telecoms also very strong. I agree with you too about like index funds and ETFs to just get into that, and then you have exposure to a lot of these companies without having to individually invest in each one of them.
Yeah, and as I was saying, SCHD, I think that's kind of been universally the favorite. I mean, the more I invest, the more I just want to put money there. It seems like, it,
Right?
it just seems like a no brainer. It just does the work for you. You get an over 3% yield, and you got dividend growth over 10% every year. It's pretty hard to find
Yeah,
companies
that's
that do
great.
that. And so if you get an ETF that does that, yeah, that's definitely my favorite holding right now is SCHD. I have a public portfolio I started on my channel a couple months ago, and that's definitely where I'm putting most of the money right now. SCHD, and I'm also putting some in VUIM just to kind of balance it out because they have very different top tens.
Right. Makes sense though. Like
Yeah,
over 3% yield and 10% annual growth. You're like, sure, and that's just you keep reinvesting into that. Keep dripping back into it, and it's just growing and growing and growing. Right?
yeah, that's the goal.
That's the goal.
Build it up and drip.
Awesome.
Yeah.
Yeah, I know, eh? I love it. I love it. Every month there's just a little bit more money there that you can just reinvest, and then the next month it's a little bit more, and the month after that a little bit more, or quarter. Obviously, I'm big into REITs, so I have a lot of monthly paying
I am
dividends.
too. Yeah.
Yeah, let's talk about REITs for a while.
Real estate, yeah. I think everyone's favorite is the O, realty income, and I've been building up my position there. I like using my Roth IRA, which in America we have Roth IRAs for our retirement accounts, and
Yep.
it lets you put in post-tax money, and so all of your dividends and all of your gains, capital gains, will never be taxed. It's quite great.
Yeah, that's great. So we have a similar uh, account here in Canada called a TFSA. You've probably seen tweets about it.
Mhm.
It's a
Yep.
tax-free savings account. I've mentioned in other podcasts that it really should be called a tax-free investment account because it's when people think savings account, they just think of a savings account in your bank, like a checking or savings account. But the
Right.
TFSA is an investment account, very similar to well, as far my understanding is very similar to the Roth. Obviously, I don't have any exposure to a Roth IRA or
Right.
whatever you guys have, but from my uh, discussions with other guests here on the podcast, they sound very similar to each other.
They do, and the reason we do this for your REITs is because the dividends, at least here in America, are not given any tax advantage, while as qualified dividends are taxed usually at a lower rate from most of these companies. I think it's 15%. Consult a tax professional. I'm
Right.
speaking, but so when you put
Yeah.
so when you're putting the companies that you're paying more taxes on, it's better to put those in to prioritize those for your tax advantage account. That's my logic, at least. So that's what I've been doing. I've been putting. So we have a $6,000 limit on those accounts. I think it's going to go up next year. So I try to allocate at least half of that, I'd say, to real estate investment trusts. And so I've been buying O. I've been buying Vici Properties, which is the they hold a lot of casinos on like Las Vegas Strip. What's the other ones? MPW, I have a small position in. That's the hospitals. That's real controversial to bring that one up, and people will be like, oh, yeah. But I have some in that. I've also been looking at self storage, like CubeSmart. I see those all over my town here, so it's like, this looks like a really good one. Their dividend growth is over 10%, so been buying up in that one too. And then in my public portfolio here on the channel, I've been buying a monthly Agri Realty. That's kind of like another alternative to they have a lot of like blue chip tenants like Lowe's and Walmart and Kroger, those kind of companies. That's the kind of tenants they have. So you look at that like that's, those guys are paying their rent. They're not little mom and pop stores.
Right.
Mhm.
Yeah. No,
Yeah,
that sounds good. Yeah. I love the REITs. I love that sector. I love the fact that again, it's the monthly dividend for the most part. I've yet to encounter a REIT that doesn't pay a monthly dividend. You do tend to find ones that have very strong tenants that like you said, they're paying their rent or
yeah,
their monthly lease, and it gives you that exposure to real estate without the headache of being a landlord. And I know that a lot of people are into the rental income, and that's great. That's
yeah.
what they want to do. That's not what I want to do.
Me either. I'm definitely preferring dividends. I see dividends as my path to financial freedom. I don't like to say retirement, but I don't think I ever will truly retire. I think if you enjoy what you're doing, you can get paid doing it. Do that.
Yeah,
but
no, I
dividend
agree.
the dividends they give you the freedom to do what you want to do. I think if you can get enough dividend income, then your 9 to 5, you can pursue things that you don't even maybe need 9 to 5, but you can pursue interests that maybe aren't going to pay what your 9 to 5 pays.
Yeah,
So that's kind of my logic in building up dividend income is it's flexibility, it's options. I think.
that's exactly what I was going to say. Work optional, where it
Mm,
becomes your option to work or work as much or as little as you want to when you get to that stage of your dividend income. Even you've probably seen tweets too of some of the accounts that we follow that have like making massive gains on a monthly or quarterly basis, and it's like
hmm
you're making more in dividends than I make working for someone else
That's
you know
nuts.
for every 2 weeks or every month. Like you know what I'm saying, right? Like
Yeah, I mean, it makes you wish I started on this 20 years ago. I could be in that position. But you know what? All I can do is make the right choices going forward. Can't
Yeah.
beat yourself up with the past.
And you ask people, well, when's the best time to start investing? And they always answer, oh, 10 or 20 years ago. Okay, well, when's the second best time to start investing?
Right now.
Right now, right? So,
Yep. And
and
it's
like you,
consistency. Be
y-
consistent. Even if you can only go with $50, invest that $50, and then next week or next month, do it again. Keep doing it. And if you keep doing it, you're gonna want to keep you're gonna work to get more income to invest, and you're gonna do everything you can to maybe you'll save a couple bucks here and there to put more towards it.
yeah, I agree 100%. Like, yeah, if it's only $50, that's better than zero. That's a lot better than zero. And,
Mm-hmm. Yep.
as life changes, I think you said you were 41. And so,
Yep.
and you mentioned 20 years. Well, that 20 years, as we know, will go by quickly. And at
Yep.
61, you're going to be in a very good position, right?
That's the goal. Hopefully, I'm trying to accelerate it, go a little sooner now that I kind of got my divorce sort of situated and settled. But
Right.
kind of
No, it makes
accelerate
sense.
it and kind of work hard, uh, for a few
Yeah, I know
years.
exactly
Put
what
my
you
head
mean.
put my head down and build up my YouTube channel.
Yeah,
Mm,
just grind for you,
Yeah.
even the next 15 years, as opposed to 20. And at the age of 56, you're sitting in a very nice position, right?
Yes. Yeah, that's what I'm looking at. I'm looking at about 10 to 15 years, I think, to kind of get to the position I want to be. But you never know. I mean, things could take off in other ventures, and you never know. So, I
Yeah,
mean, if I
that's
if I could make YouTube videos every day, that would be amazing.
right.
Now, at the moment, that's not really feasible, but you never know. Maybe in a couple years, if I keep at it, it could be.
Yep, yep. It's definitely possible. Like, there's a lot of people out there doing it, obviously. So
Yep.
it's uh, it's become a viable job option. The creator economy in 2022, going into 2023.
It's amazing. Yeah, there's so much opportunity out there, and just gotta go and grab it. And that's what I'd say to anyone thinking about making a YouTube channel is like, that's stopping them is like, just do it. Just start putting stuff out and study the analytics and what your audience likes, and just do it.
Yep. Same as it, like starting a YouTube channel and starting to invest. It's the same mind concept, or thought process, or mindset. Is you
Very much.
just have to start, right? You A few weeks ago, maybe a month ago, I saw a tweet that said, "One day or day one," which I thought was very powerful, right? Because if you
Hmm.
keep saying, "Oh, one day I'll do it. Oh, one day I'll do it," well, then day one never comes. But then day one comes and you actually start. It's a huge difference. Or it's the same two words, but just one day or day one.
Never heard that. That's I like it.
But amazing, right? Like, just
Yeah,
again, that's the mindset you have to have. You have to stop saying one day and start saying today is day one.
I like it. Yeah,
Yeah.
you gotta get started. You gotta make the move. Mhm.
Yeah. I agree 100%. Um, so we've talked about REITs, we've talked about consumer staples, we touched briefly on energy, or sorry, IT.
Yeah, IT.
Um,
Yeah.
we haven't got to energy yet. I touched briefly on the Canadian banks and telecoms, but I guess anything in any of those sectors that you would like to discuss?
It's the Canadian banks. You're talking like this TD, and there's Bank of Nova Scotia, Bank of Montreal. I know them. I just don't have any.
Yeah.
I think as Americans we pay extra taxes on those, which is kind of why I've not really um, looked at those too heavily. But I'm interested in those three in particular that I've looked at.
Yeah.
Um,
So obviously, I can't speak to how American U.S. taxes work.
right.
I do know that I think they're all available on the New York Stock Exchange. They're obviously all available on the Toronto Stock Exchange. And so, yeah, the big five banks are, as you mentioned, Bank of Nova Scotia, Bank of Montreal, TD, and then there's also the Royal Bank, which is RY, and CIBC, which is the Canadian Imperial Bank of Commerce, and their ticker symbol is CM.
Hmm.
And I have noticed, like, TD's presence in the US. Obviously, in Boston, there's the TD Gardens. But I was watching a YouTube video a week or so ago, and it was in New York City, and I just happened to see in the background there was a TD branch location. I was like, "Oh, that's interesting."
Yeah, I think they have them in the Northeast. I live out west, so
Yeah.
I haven't seen them out here, but
Are you in
uh,
California?
I'm in Nevada.
Okay.
Yeah, so
Cool.
close to California. Yeah.
Yeah, yeah.
Hmm.
So yeah, so the Canadian banks definitely are a very strong sector. As I mentioned, paying dividends for all of them are over 150 years. A couple of them are
Wow,
coming up on their 200-year anniversary, which is,
that's
mind
amazing.
blowing in itself, right?
Yeah, that's. I mean, yeah. How can you argue with the 200-year history? Like,
Yeah.
yeah,
I think it's Bank of Nova Scotia that in 7 years, 2029, I think that's their 200-year anniversary of paying dividends. And then I believe Bank of Montreal is not far behind them in 2031 will be, or maybe 2033 will be their 200-year anniversary.
and Bank of Nova Scotia, they're yielding like 5 or 6% last I looked. Right?
Yeah.
That's better than most of our American banks. We have like J.P. Morgan Chase is our big one, Bank of America, Wells Fargo. Wells Fargo has been a really crappy investment for most people. Um, and Citibank, they've also not been great. We had the 2008 crash, which all those banks cut their dividends and
Yep.
fell massively. Um,
Yeah, we were affected by that as well. Obviously, I mean,
yeah,
the Canadian and U.S. economies are tied together.
they are.
Obviously the trade between our two countries on a daily basis is massive. So you know,
Yeah,
anything that happens in the U.S. obviously affects Canada as well.
yeah, for sure, for sure.
Just one final thought on the banks. Obviously, you mentioned sort of the big five American banks. Your J.P. Morgans, your Citibank, Bank of America,
Yep.
and so on. And I mentioned the big five Canadian banks. I think the massive difference in that sector is in the U.S. There's also so many regional banks, whereas in Canada there are very few regional banks.
Hmm.
So that's just
That's true. Yeah, there's maybe like 30 regional banks here in the states. Yeah.
right. So whereas in Canada I can think of three, maybe four
Oh
regional
wow.
banks. Yeah,
So the big banks really have a hold on your guys' economy there.
yeah,
Yeah.
definitely,
Okay. Oh wow. Okay.
definitely.
That's definitely a place I think in 2023, probably in my Roth IRA, I'll start looking at, like the Bank of Nova Scotia, or maybe there's an ETF that kind of covers them as a group. That seems like a nice way to invest in that too. To look into that more. That's a really good idea.
Yeah, so I do have an ETF called DFN.to. A lot of them are just .to to identify that it's Toronto,
Hmm.
and it's got a very scary high yield, but they do hold at least 4 or 5 of the Canadian banks, plus a couple of the telecoms and a couple of the, insurance companies as well. I believe Sun Life and Manulife in their portfolio. Um, but it's got like I said, it's a scary high yield of I think it's 16%.
Holy crap.
Yeah. So I don't know if you saw the episode with, Rusty at Rusty Ram, but I told him about that, and then he went and did a 10 or 12-minute segment on his YouTube channel about
I
how
love
they
his
do.
channel. Yeah, Russ's channel. I love that channel.
Yeah, he's good, he's
Yeah.
good.
Yeah, he's great.
So, yeah, he did a good 10 or 15-minute segment on how they actually accomplish that, and it's by, selling covered calls and options and etcetera, so
Okay,
eh
so like JEPI or the QYLD kind of thing, the covered call ETFs. Gotcha.
right. So, 'cause his first question was like, "Well, does anyone in the group of companies that they have in that ETF, do any of them have a 16 or 17% yield?" And I'm like, "No, they're all like, the 3 to 6% normal yield." And so then he got really curious and he's like, "I got to dive deeper into this and figure out how and why." Right? So yeah, he ended up doing a really good, like I said, 10 or 15-minute segment explaining
I'll
how
have to
they
check that
achieve
out.
that 15 or 16% yield.
Yeah, I don't hold any of those covered call ETFs at the moment. I think in a bear market, I don't really like exposure to those because you don't really get much upside with those, right? Because what they're doing is they're selling covered calls and paying out the premium as dividends. So you're basically not getting upside, but in the bear market, you're still exposed to the downside.
Right.
So I've kind of avoided those. It seems like maybe more of a I'm already in retirement, living off my dividends kind of thing. Maybe I'd start looking at adding some of that.
Right.
Yeah,
I do have a small position in DFF or DFN,
DFN. This okay? Yeah,
and I mean I've kind of kept it small because that yield is so high, but at the same time, it's also so juicy when a
yeah,
literally a $7 or $8 stock pays you a 10 cents per share monthly dividend. It's okay. Well, it's like sure, I'll buy 50 or 100 of those and just happily collect my $5 or $10 a month as long as I can, right?
yeah. Stuff like that I keep small too. Like MPW, I was talking about earlier, that hospital-based REIT. Pretty controversial. If you bring it up on Twitter, someone's going to say something. But I keep that very small position. I think it's yielding like 10%. It's ridiculous. I don't want to go too heavy on it, but stuff like that. I don't want to chase yield too much. I prefer looking for history of solid dividend growth.
Yeah,
2, 3, 4% yield. If double digit dividend growth is preferable, at least in their history, that's kind of what I look for.
yeah, great point. And I've definitely been guilty in the past of chasing those high yields, where I am now shifting focus to more exactly what you said, looking for the consistent dividend growth.
Yeah, and I think there's a balance there, really, when you're looking at this stuff. I actually put out a video of this yesterday because I made a portfolio for the channel where I've selected about 20 dividend growth stocks, and these usually average about 2.5, 3% yield. I think the whole portfolio is yielding 2.7%.
Right.
And then I looked at like you look at SCHD, like I mentioned earlier, we get that 3% yield, double digit dividend growth, and you look at their holdings, and they have a really good mix. They have the Broadcoms, the Texas Instruments, and the Home Depots, and those are really like dividend growth stocks.
Yeah.
3% yield and double digit dividend growth. But they also have Verizon and IBM and Altria. These are 6, 7% yielders. They don't really have the dividend growth, but they have the income. And so I was thinking, I should throw 3 or 4 of those into the mix, I think, to kind of boost my overall portfolio yield up just a little bit without like chasing yield, but just trying to get a little more balance there. So that's kind of what I'm finding right now. And I'm making videos about that right now, actually.
Yeah, that's great. What I like to think of for the dividend growth is I love it when companies I don't work for give me a raise,
That's great. That's great. I mean, yeah, that's exactly what it's all about.
right?
I did nothing and I got, 10, 15% raise. It's got to buy more of this stuff.
Yeah. Just keep dollar cost averaging in, right?
Exactly. Yeah. Not trying to time the market on this stuff. Just be consistent. If you can put in $100 a week, do $100 a week, but just do it every week.
Yep. Whatever you can afford, whether it's
hmm
like you said, 100 a week or 50 a month, or if you can do 400 or 500 a month, that's incredible as well, right?
Yeah. If you can do 500 a month, here in the States, you'll be able to max out your Roth IRA. And been doing that for the last few years.
Awesome.
Yeah. I'm trying to really push though. I'm trying to invest a few thousand a month right now is about what been doing. And next year I'm try to boost that up a little more. Every year I try to go a little higher, a little heavier.
Yeah.
You know.
Good strategy. Well, and every year you're making a little more in dividends to reinvest as well. So the money is going to be
Can you hear
there
me?
one way or another, right?
Oh man. Hit him.
Pardon me?
Oh.
I can still hear you.
Can you hear me?
I can hear you. Yeah. Can you still hear me okay? I can hear you clicking on your keyboard.
Okay. How about now?
Yeah, perfect.
Okay. I don't know what happened there.
Yeah, I know. It's technology, right? It's great when it works.
I think we're back now.
Yep, you're definitely back. That's good stuff.
Okay.
Um, anything else you want to talk about? I know we've kind of kept this short and sweet, but that's okay as well. I know we've
Yeah.
covered a lot in just half an hour.
Yeah, we sure did. Nothing I could really think of. I'm happy to go any direction you want to take it, though.
I guess telecoms is another one I like to compare Canada to the U.S. simply because we kind of have a big three here, and there's sort of the big three in the U.S. as well. So I do find that one sector that's somewhat more similar. You know, Canada being Bell Canada, Telus, and Rogers Communications, who are not just telecoms anymore. They've gotten into media as well, and the
Hmm.
same thing has happened in the U.S. with AT&T, Verizon, and T-Mobile. Any
Yeah,
thoughts on
T-Mobile.
the telecommunications industry?
Well, I was a holder of AT&T for a while, and then when they announced their dividend cut, I sold for a little bit of a loss, but I mean, they really went down after that, so it was a really good decision in retrospect.
Right.
I do hold some Verizon, and I'm down on that. I have maybe it was like 35 or 40 shares of Verizon. It's like $1,500 worth. Down on it, and but that 7-8% yield, I'll continue to collect that. I'm not really going heavy on that. I think in that sector, I made a video about this a few weeks ago. What I am more interested in is the tower REIT stocks, like American Tower and Crown Castle. So they hold the land that has the cell towers that AT&T and Verizon and those will lease.
Oh, wow.
And I think that might be a more compelling place to invest because the debt carried by like the AT&Ts and the Verizons and it just looks like a better way to maybe potentially invest in that sector. Um,
Yeah,
and both American Tower and Crown Castle have strong dividend growth numbers. I made a video on Crown Castle a few weeks ago, and I don't own either one, but I think if I was just to add my exposure to that sector, that's probably the way I would do it.
yeah, I love those REITs where you're getting a REIT, but so you've got that exposure to the real estate, but you're also kind of giving yourself exposure to another sector.
Hmm.
So that's a prime example.
Yeah, definitely. I also hold some Comcast in the communication sector. I like where they're going with their dividend growth over 10%. I think it's like 12% annually, about a 3% yield. I feel better holding companies like that than I do AT&T and Verizon. But I'm going to hold my Verizon, and we'll keep holding it. And I would like to expand into the Canadian. Maybe look at one of those
Yeah,
next year.
definitely.
For sure.
Yeah, I've started recently, just a few months ago, started to dollar cost average into Bell Canada. It's the oldest of the three. It's been around
Nice.
basically since telephones were invented, right? Um, so yeah,
Very
that
nice. Yeah.
yeah, and I'm not sure the percentage yield, but it pays a quarterly dividend of, I think it's 92 cents per share. So it's that's pretty nice as well. I'll take that 92 cents all day long, every day, every quarter.
Absolutely. every one of them counts.
Definitely.
Yeah.
Uh, just touching back on the REITs that give you exposure into other sectors. We have another one here in Canada that I'm fairly heavy on. It's called NWH, which is Northwest Healthcare. You've probably seen some tweets about that, but it's another one of my favorite REITs because, as you can imagine, with the name healthcare, they invest in the properties that have the doctors' offices and the medical buildings and the clinics and those types of
Mhm.
real estate. So that's
Mm.
just another example of getting a REIT that gives you exposure to another sector.
Yeah. It's a good way to get that exposure for
I
sure. Real
agree.
estate. Yeah. Nice. Yeah. I'm looking it up, looking at NWH right now. I'm not sure I can invest in this. But because it's a Canadian,
I'm sure
I'm
you
not,
could.
yeah. That's one place I need to improve is international. I'm very focused on American stocks. It's just, I guess, what we have here.
Yeah, well, and to be honest, I'm very focused on Canadian stocks primarily because the exchange rate is not in my favor right now. And there's all those companies that we mentioned off the top, your Costco's and Pepsi's and Johnson and Johnson and Procter and Gamble. I'd love to own all of those, but just with the exchange rate right now, it's I I can't justify the cost.
Okay.
Yeah.
Interesting.
Especially when, I can buy so many Canadian companies as well without getting hit by the exchange rate. So it's just like, to me, it makes sense where on the Canadian market, my one Canadian dollar is worth $1, whereas on the US market, my one Canadian dollar is worth 70 to 75 cents. So I think you
S
understand that math, right?
So would that actually work the other way around and give us an advantage then in America?
You would have a huge advantage. The exchange rate would be a huge advantage for you right now.
See, I didn't know this.
Yeah.
So this would be a decent time to look at Canada stocks, huh?
It would be a great time for you simply based on the exchange rate.
No kidding.
Not financial advice.
I know, I know. This seems like a future video for me to come up with though, some about some Canadian stocks. Maybe I should buy one and
Yeah, definitely. I'm sure you follow Darth Dividend
I
and his
do, I'm a
YouTube
fan.
channel.
I'm a fan, yeah.
He does a lot of videos and tweets about the Canadian market, so probably should
He
check them out and give that would give you some ideas for yourself.
Yeah, okay. So, like, make some ideas here, yeah. Interesting. I didn't realize that we had the advantage there with the exchange rates.
Yeah, basically, again, I don't know what the exact exchange rate is today, but your like one US dollar would be worth about $1.25 or $1.30 Canadian. So if you know, I mean, again, that's you can do the math that if you're looking at a $12 stock, $12 Canadian stock, well, that's worth about $10 to you, right? So
Right, okay.
basically,
As
you'd be saving like $2 on every. In that example, you'd be saving $2 or 2.25 or 2.30 on every stock on every share.
Okay, cool.
Yeah, just an interesting side note, I guess. But yeah, definitely, I guess something for you to look into. And yeah, that would make a good video for you as well.
Yeah, it's a place I need to, like I said, grow my knowledge. So I've been very US focused here.
Which again, I think is fine because, like we've mentioned so many times now, there's so many great companies that I hate to use the term "you can't go wrong," but there's so many that seems like you can't go wrong, right? Like it's and going back to those consumer staples, we know that the Procter and Gambles are in every household, and the Johnson and Johnsons and the is in every household, and the
Absolutely.
Pepsi is in every household, right? Whether it's in the snack category or the beverage, whatever, right?
Yeah, they got the snacks, they got the Cheetos and the Doritos and all that good stuff.
Yeah.
Yep. Mhm. Sweet.
Cool. Well, if there isn't anything else you want to discuss, maybe we'll wrap it up.
All right. Well, it's been a pleasure getting to chat with you today, Dave.
Yeah.
Really
Thank
cool.
you. Thank you so much for coming on the Passive Income Podcast. Definitely check out Div Growth Income on YouTube and Twitter. Give him a follow on Twitter and check out
Yep.
his videos on YouTube
And
and
subscribe.
and subscribe. And yeah,
Yep.
subscribe to the Passive Income Podcast as well. Please be sure to leave a like. And yeah, leave a comment down below too. I really definitely need to get more comments going in the comment section. So, Nick, thank you again so much for coming on, and we'll see you around the Twitterverse.
All right, sir. Thank you.